Hello everyone, this video is going to cover the absolute basics of trading, what is a chart, and everything else you need to know as a complete beginner. So the first thing we're going to be looking at is a chart. Most people do all their charting on TradingView, so you can simply type in TradingView on your computer, get the free version, and you can instantly chart, and you can actually connect your accounts through TradingView, which we'll get into later. So yeah guys, this is a chart on TradingView and it's simply showing two things. So we have our x-axis, and our x-axis is showing time, right? So we have 2021 to 2025 on Apple, and we have our y-axis, which is price, what Apple is priced at a certain time. So this is all the chart is showing. We're not showing any of the fundamentals of the chart or asset. We're not showing, the news, the revenue, how the company's doing, their new management. We're not showing any of that stuff. We're simply showing time and price, and that is going to be represented by candles on the chart. So these are all called candles. So as I stated, we're using Apple as an example right now, but there are many things to trade and chart. There's commodities, there's Forex, there's futures, you can trade whole indices, or you can just trade stocks like Apple or Costco, Walmart, whatever it may be. So yeah guys, we have our x-axis, which is time. It's showing us the time and the price. So we'll get into candles now. Candles show the data of price in any specific time interval you select. So here are all my time intervals at the top, and right now I'm on weekly. Each one of these candles is a single week. It's showing data for a single week. If I shift it down to the daily, you'll see more pop up because now it's showing data for a single day. I shift it down again to 4 hours, more data. 1 hour, more data. And as you can see, if you zoom in, you show more data, the time will be less spread out. So now we're only seeing a couple days, and the price will be less spread out to compensate for all this data. So yeah, now we're seeing it on the hourly time frame. So guys, you call these time frames. These are all the ones I have set to be on my chart, and these time frames directly correlate with the amount of data shown, and the data is the candles, which we will get further into right now. As we zoom in, you will see there are two types of candles. A green one, which is a bullish candle, and a black one, which is a bearish candle. So guys, bullish simply means it's going up, and bearish simply means something is going down. Your chart might be green and red, it's the same thing. Bullish is going up, mine are green. Bearish is black, it's going down. I will show you guys the chart settings later. This is just for the SMC trading charts. So yeah, there are two types of candles, and now we'll get into the basic anatomy of the candle. So as I stated before guys, the time frame correlates with the data shown, and this also correlates with the anatomy of the candle. So this whole candle is 1 hour. A candle has wicks, so these lines are called wicks, and a candle has a body. So this is called the body of the candle. These are the wicks. This is also a wick, and this is the body. Like I said, this is an hourly candle, meaning at the open of the hour. So we open at 9:30. This is going to be considered the open in a bullish candle, the bottom of the body, and then the top of the body here is the close. So it's where it closed after an hour. So 9:30, 10:30. So it opens here, the start of the body in a bullish candle, the green candle, and it closes here where the body stops at the end. So now you're going to ask, what do all these wicks represent? What do the two wicks represent? We'll get into that now. So it opened here at the start of the hour, and then the lowest it went was the bottom of this wick. So in this hour of price, the data it's representing the hour of price, this is the lowest price went. This is the highest price went. So it opened here. This is the lowest it went. This is the highest went. That doesn't really matter. It's showing you with the wicks. What matters is it closes here. So let's try it for another bullish candle, right? So we have our open here. Let's say it went down, price went down, it made its lowest here. Then let's say it said, oh, I don't want to go down, I want to continue going up. So it goes all the way up, and it makes its highest here. But then it pulls back just a bit, and it closes here. So again, this is where a bullish candle opens at the bottom of the body. This is lowest, highest, close. We're going to get into a bearish candle. So a bearish candle is representing that price closed down below where it opened. So it's bearish, it's going down rather than above. So like we just went over, it opens here, the candle opens here, and it closed here, closed above where it opened. So it's bullish, it's going up. So with bearish, it's flipped. The open is here at the top of the body, and then you see this little tiny wick here, that's the highest it went. Then it goes down. This wick is the lowest it went, and then the bottom of the body is the close. It's the bottom of the body now because we flipped bearish as opposed to bullish. So yeah guys, it's the same thing. This would be your open, and then you have your high, then you have your low, then you have your close. This is how all candles work, guys, and there's only two types of candles, bullish candles and bearish candles, like I said, and the time frames directly correlate. So if we were to go back up, we go to daily or weekly, Let's go to weekly here, and then it's the exact same thing, guys. You're getting all this other lower time frame data compact into now one candle. As you can see, this is the whole week of 8/8/2022, and then we go to the next week, next week, next week. So yeah, guys, that's the absolute basics of the chart and the candles on the chart. As for everything else that's being displayed, guys, I'll briefly go over everything. So obviously here is when you pick what you want to trade. There's stocks. Here's some popular stocks. There's funds. There's futures. These two things are what we basically mainly trade. There's Forex. This is also what people mainly trade. Crypto, indices, bonds, economy. So yeah, mainly people trade stocks, futures, Forex, crypto. You pick what you want to trade. You can even bookmark it, and the bookmark will show up on this sidebar here. Like we stated, this is where you add your time frames. You're just going to star all these ones I have starred because that's what we use in the SMC or ICT. You're going to keep the data as candles. We already went over how the candles represent the data. Very good visual representations of the data. These are called indicators, and they basically go over other things that is not just pure price and time. Things like volume, other kind of oscillators, algorithmic things that kind of measure discrepancies in price. So people use these to trade, but with SMC or ICT, we do not use these. This is to set alerts, which you may need. You may find it helpful. This is to enter replay mode, which you're simply replaying price. And we'll go over some tools here. Pretty much everything important I have starred. Everything I use, I have starred. I'm actually going to star this too. I use this. And yeah, everything that I have starred is something you'll use. You really don't use a lot of this stuff. But yeah, basically this is all how you draw on your charts. So we went over the chart, the basics of it, and the basics of candles. Now we're going to get into actually placing a trade and what placing a trade means. Before we do that, I'll real quickly go over all this stuff on the right. One thing you need to note is that you want to be in New York Eastern time at all times because that's where the market operates. That's where the US stock market operates. So you want to set your time zone to New York Eastern time, whatever that may be. So these things, this is just a help center. This is the economic calendar. So it shows you when we have big US economic news or any country you choose. This is a screener, so it's just different kind of stock screeners or market screeners, different algorithms they have to show you different data sets. These are just your notifications. The idea stream, I guess, is just kind of like a community thing. This as well, you can just chat with people. You have your ideas there. Hot list is just different data sets such as high volume, highly traded, ones that are falling a lot, ones that are rising a lot, etc, etc. Don't worry about this. I don't even know what that does. Your alerts is just going to show you your alerts. Your watch list is all the stuff you have bookmarked, as well as other things that you can add. So yeah, and then the final thing I want to do is go over settings. You guys don't need to know any of this. I'm just going to speed it up and you can copy my settings. Yeah, and as you guys start to understand more about trading, you can kind of play with that, but these are just the basic SMC trading chart. So we talked about the chart, now let's talk about actually interfacing with the chart. So this is other stuff we didn't go over. This is for scripts, this is for strategies, coding stuff and all that, stock screener, but trading panel is where you connect your broker to trade your money. And obviously we're not going to start you with real money. So the first thing we're going to do is they have this thing called paper trading, which is a simulated trading environment. So you're going to simply click on this and you're just going to connect. And this is what you'll be trading until you complete the course and you get a funded account. This is how you're going to practice and test everything. As you can see, you simply have your account balance, your equity, and your P&L, which will be how much you've made or lost. So we can minus this or collapse it. And now as you can see, these two buttons became available to press. So there are two things you can do when trading. You can sell the market, which means you're expecting the market to go down, or you can buy the market, which means you're expecting the market to go up. So I'm going to click on this. Let's say we're expecting the market to go down. Let's just go with 10 units. That'll translate to roughly this amount of money. That doesn't matter because it's paper. Everything you trade on is going to be different. It's going to be converted differently. You know, whether it's units, shares, futures, have contract, everything has a different unit to measure the price in. So when we click these buttons, it's simply called a market order, which means you're just buying or selling at whatever the price the market is currently at. These two things here are for your take profit and stop loss. So this is basically when you would want to close the position and take profit, and this is when you would want to close the position when you've lost too much. So these have to do with risk management, which we'll get into later. So right now, say I'm selling 10 units and I place this market order. So it's going to say order is placed to sell, order executed, and then you're going to see the order on your screen. So I'm going to let this play out for a bit just so you guys can see what happens in relation to the candle. So like I went over, this is a bearish candle. So say I'm expecting it to go down, and that's why I pressed sell. So now I'm up $39. In order to close your sell positions, you need to buy. So I'm going to click this blue button and I'm going to buy the same amount of units that I sold. So I'm going to buy. It went through. I don't know why it's not showing up, but it should show up $40, a green 40, whatever we just made here. So yeah, that's how it works with market orders. The real way we'll be trading is with limit orders. So we went down to the 1 minute chart and we're going to practice placing limit orders. So what you're going to want to do is right click on the screen. So I'm right clicking. You want to go to trade, and then this is how you place your limit order. So say I'm going to sell the same amount. It's all the same stuff. Take profit, stop loss. Time in force is how long the order will be in force. I think it's usually going to be a day, so we'll put it as a day. Doesn't matter much now. So now I have this limit placed that instead of buying at the market, buying at wherever the market is, it's going to be at wherever I place this. So I'm going to place it right here so it can maybe hit it. So yeah, it hit it and it executed, and now we are in the trade. So now let's practice protecting the position using risk management. Take profit. Let's say we want it to be 10 ticks. Our stop loss, we want to be 10 ticks. So this is just a 1-to-1 ratio. So when you place that, you can see that new limit orders were placed. And this will be your stop loss, and this will be your take profit. So as you can see, take profit was hit, getting us out of the trade. Yeah guys, those are the two basic ways to place an order. Again, when you are selling the market, you are expecting it to go lower. You're expecting the price to go lower. When you're buying the market, you're expecting the price to go higher. And these candles represent what price is doing in a certain time. Right now they are representing what price is doing every minute. And what trading basically is you are buying and selling liquid assets with other people. So you are trading prices with other people. So say you're right here, you're at 19,817, and you wanted to sell the market like we did in the examples prior. So you're right here, you wanted to sell the market. Price needs to go down for your position to be more valuable. You can exchange it with other people. You trade that position with other people. So you make money because it did what you wanted to do. Now say if you bought the market here, you were expecting it to go up. So you bought the market here, it went up. Now your position is worth more and you can sell to other buyers. That's basically what trading is, whether it be a stock, an index, whether it be, any of these things, stocks, funds, futures, they all work the same. If you go to gold, it works the same. It has a price and you can buy and sell at certain levels. Stocks, it's the same thing. You go to Nvidia, it's the same thing. You buy and sell at different levels. I could buy here, blah, blah, blah. It's off session, so it's not going to work, but yeah, it's all the same. And an example with shares, when people say they're investing in companies or stocks. So say you buy the market, you buy a share at $50 right here. So you're buying shares at $50, so each one you buy is worth that. And then you're expecting it to go up. So obviously Nvidia goes up, this stock goes up, and as I go up, they become worth more. So say you bought 1,000, 50 times 1,000, and then it becomes worth 120 times 1,000. Then you sell here. That's how you make money. You buy, you hope for it to go up, you sell. So it's an exchange. You can do the same thing on the contrary when it's going down. Say you sold here, you buy here. That's how you're making money. So either way the market goes, either way anything goes, you can make money. So guys, this is obviously very volatile, and if you don't know what you're doing, it's just gambling. It's just randomness and it's just chaos. That's why in the next video, we're just going to be going over briefly what is SMC, what is ICT, what we teach you, and how it helps you navigate all this stuff. Oh, one more thing to show in case you guys didn't get these settings. I'm not quite sure what all this does, but yeah, those are the settings for this. I already went over candles and what they represent. Real quick, I want to go over the three basic types of market structures. So we're familiar with these words that we learned. So there's bullish, there's bearish, and there is consolidation. So yeah, there's three basic types of market structures or trends, patterns in the market. It's very simple. Bullish is simply when it's going up, and when it's going up, it's going to make higher highs, lower lows, higher highs, lower lows, higher highs, lower lows, higher highs. So that's going to be bullish, and you can see that here, how it's just going up. That's bullish market structure. Bearish is the same thing, but the opposite. So it'll be making lower lows, lower highs, lower lows, lower highs, lower lows. You can see that, right here. I don't know if that's the best example. You can kind of see it in different places, when it's going down like that, down here. So that's bearish. or downtrend, bullish or uptrend. And then consolidating is when it's moving sideways. So a consolidating market will look something like this, or maybe that's just a very clear example, but usually it'll look something like this. So that's consolidating. That's a consolidating market. That'll look something like this when it's kind of moving sideways. It doesn't really have a clear direction, you know, like this, like this. Like this is a good example. Everything's just moving sideways. So those are the three basic types of market structures. Obviously, as we went over, in bullish, you want to buy the market. You're expecting it to go higher. In bearish, you want to sell the market. Consolidation, you would not want to play the market. That's pretty much everything regarding the basics. If you didn't already hear me say, the market makes highs and lows, which is pretty intuitive. You know, this would be a high, this would be a low. Come over here, this would be a low, this would be a high, this would be a low, this would be a high, this would be a low. As for the absolute basics, this pretty much does it, guys. So thank you for watching. As always, if you need any help, ask questions. We're always here to help.
Yeah, hello.